Ritu Arora is Chief Investment Officer of Canada HSBC OBC Life Insurance. She's joining us right now on the show. Ma'am, thank you very much for your time. Good morning. Prashant this side. How are you feeling about the market as a fund manager, ma'am? Are you feeling a little uneasy? Our previous guest on the show was talking about the very low levels of volatility and that kind of being a bit disconcerting. The difference though is you are in it for the long haul, unlike many who might have very different and rather shorter time horizons. But how do you kind of sort of reconcile what we are seeing out there?
The market, I believe, the equity markets are taking a pause to evaluate the Indian fundamentals as well as watch the global volatility closely. Fed action is definitely something which does impact India, and we are, I think, playing along with the turmoil that we are seeing around, but with a lot of strength. So I wouldn't be surprised over the next few months if we see some volatility, we see some pause, some time correction. But I remain quite bullish for Indian growth domestic story, and I expect a consumption-led domestic recovery. So I'm very bullish with the next 3 years time horizon. And this pause is a good time to introspect and reevaluate strategies.
So you see a pause and a time correction. You don't see a price correction for the Indian equities?
Not a sharp price corrections. The market have shown a tremendous amount of strength. Also, the economic fundamentals have been progressively improving. Corporate results after 5 dismal quarters, Q4 of FY16 showed some improvement, and the trend was further strengthened in Q1 FY17. And I would expect improving results over the next few quarters. So hence, since the fundamentals are improving, the economic, macroeconomic fundamentals couldn't be better. I would not expect a sharp correction in the market unless something horribly goes wrong globally.
Right. You know, equity mutual funds are flush with funds. So, you know, all that, where is that cash going? I mean, there's only so much cash you can hold on to. So what's happening? You know, the point is, if you look at the last many months, the market deployment of the cash that you are getting, I mean, it basically trails the deployment, right? Sorry, deployment trails the inflow. So you get money, but the deployment is kind of lagging. I mean, we can go back and look at the last many months of data, which means that mutual funds are raising their cash levels. But as I said, that can only be to a certain point. So what are you doing? Where are you finding opportunities, ma'am?
Clearly, since March, the markets have given very little opportunity for anyone to find a new investment opportunity. Month on month, we've continued to rally on. And I'm not surprised that some of the fund managers are waiting for a pause in the market, which is what we are seeing at this point of time, to deploy new funds. For me, clearly, it's a domestic theme that excites, and wherever there is an opportunity, be it banking names, be it NBFCs, cement, automobiles, auto ancillaries, we are quite invested. We are fully invested, unlike others that you mentioned.
So the high valuations of these domestic cyclical stories does not worry you?
For new investment, it starts becoming tricky, and that is why a pause like this provides an opportunity, and a small correction which we might see in line with the global volatility will definitely be bought into.
All right, we've faced a bit of a technical glitch with Ritu Arora, but that's a confident and bullish sounding Ritu Arora of Canada HSBC OBC. So bullish on the Indian markets. We won't see a big correction. You could see a pause, you could see a bit of time correction, but she will bet on the cyclical theme, particularly on the domestic side. Let's slip into a very short break.